Bitcoin has fled by 23%, 92% of investors have made money, Binance has become the last granary. Is the bull market about to be ignited? Driven crazy by laws, is Tether launching its new stablecoin USAT to obtain an international compliance pass? With 150 L2s collapsing collectively, will startups still follow suit? Is USDH Hyperliquid trump card? Or just a cryptocurrency gossip drama? Previously a Buddhist bystander, now stepping on the accelerator, has Pakistan become a crypto-crazy race overnight?
Monday, September 15th, BitcoinTV Chinese channel, Where is the Coin Chain? I'm Michael. First, let's take a look at the 24-hour cryptocurrency headlines. This year's market trends have been a vivid example of a Bitcoin and Ethereum exodus. Exchange wallets are shrinking. Bitcoin holdings have plummeted from 3.05 million to 2.47 million, a 23% drop, the most severe decline in recent years. Ethereum isn't far behind. After the price fell below $1,500 in May, users fled en masse, wiping out 3.5 million coins in just 4 months, a 20% loss. While Binance still holds 600,000 Bitcoin and 4.5 million Ethereum, it feels more like a last hurdle. What does this mean? People are either stuffing their coins into cold wallets as heirlooms or moving them into DeFi to earn interest. In other words, circulation is tightening and market selling pressure is dwindling. When demand returns, prices could skyrocket. To sum it up in one sentence, this wave of operations on the chain is quietly laying the foundation for the bull market. Bitcoin's current state resembles a national money-making conference. The latest data shows that 92% of the Bitcoin supply is profitable, which, if historically accurate, is the hallmark of a bull market. The long-term average is only 75%, but this surge has reached the maximum, indicating that everyone's wallets are flush with cash. According to past trends, a profit rate exceeding 90% signals the start of a major bull market rally. A dip below 90% likely signals a minor correction, and a bear market bottoms out when the profit rate falls below 45%. The current atmosphere is one in which those who are making money feel they're not making enough, while those who haven't gotten on board are stamping their feet in frustration. While some may be tempted to cash in while they can, on-chain signals continue to remind us that this bull market is just the appetizer. The main course is yet to come. Memecoin has been lagging behind lately. The latest data shows its market capitalization has fallen to 0.048, roughly halved from its peak of 0.1 during the craze in late 2024. Simply put, market speculation has cooled, and people are less inclined to buy into the meme trend. However, this isn't the first time. Historically, whenever the price drops to the 0.04 to 0.05 range, memecoins often begin to gather momentum. As long as liquidity returns, the market takes risks, and community enthusiasm surges, memecoins could surge again. A breakout above 0.06 to 0.07 would essentially signal the start of the next meme frenzy. Memecoins may be playing dead right now, but remember that their defining characteristic is resurgence. Please like and follow us to sort out the latest developments in the cryptocurrency, blockchain, and mining circles within 24 hours. Click the small bell to join the channel and become a member. You can receive the member wealth password from Monday to Friday. Recently, the stable currency USDT, with a circulation of $170 billion and nearly 500 million users, is a virtual money printer for the cryptocurrency world. However, its wallets contain not only short-term treasury bonds, but also Bitcoin, loans, and precious metals. US regulators saw this as non-compliant. Consequently, Tether had to create a sham account and prepare a US-only stablecoin. Simply put, it's like driving a car on the road, but now it has to get a license, undergo an annual inspection, and register.
Y ahora mismo en el entorno Estados Unidos, en el entorno latinoamericano, en El Salvador, y luego, considerando que el crecimiento del mercado asiático va a ser brutal hace que Tether se siga consolidando como la principal stablecoin, yo creo que en este punto creo que Tether ganará la batalla.
Tether announced it will launch its US native stablecoin USAT by the end of this year. Anchorage Digital Bank NA will serve as the issuing bank, and Cantor Fitzgerald will serve as the custodian of its reserve assets. USAT complies with the newly enacted Genius Act, with its reserves backed by highly liquid, US dollar-denominated assets, and excluding non-compliant assets such as Bitcoin or gold. Bo Haynes, former head of the White House Digital Asset Advisory Council, has been appointed USAT's U.S. Director, with headquarters in Charlotte, North Carolina.
Bo Haynes, a former Trump aide, has become Tether's foreign aide, a classic example of playing the home turf. As soon as the news broke, Circle's stock price plummeted 5%, like seeing a rival coming for the taking. To put it bluntly, this isn't simply a stablecoin war, it's a fiscal game in the making. While the White House is relaxing regulations, it's also thinking, if stablecoins can help us buy some US Treasury bonds, that would be the best of both worlds. The logic behind this is that stablecoins aren't just a stabilizer for the cryptocurrency market. They could also become a fiscal ATM for Washington's finances. This year, developing L2 has become a must-have for cryptocurrency entrepreneurs. From small businesses to Wall Street giants, everyone is shouting, "I want an L2." Why the hype? Because it's secure, cost-effective, and comes with the added bonus of a money-printing machine. Take Coinbase's Base, for example. In June, it raked in $4.9 million in transaction fees, yet its cost to the Ethereum mainnet was only $50,000, a truly impeccable profit. Even more frustrating, L2 nodes are centralized, placing all power in their own hands. You dictate fees, permissions, and data to whomever you please. A true high-end private blockchain. Doesn't it sound like a foolproof cheat? Unfortunately, reality isn't always a fairy tale. Market data is cooling, activity is stagnating, and capital inflows are slowing. In other words, despite the hype, investors are already hesitating. Is this the next generation of financial superhighway or just another bubble?
L2 Beat data shows that among the over 150 L2s currently available, most have TVLs below $1 million, indicating insufficient activity. Severe homogeneity makes it difficult to break through simply by pursuing faster and cheaper. Investments in R&D, manpower, and marketing can easily become sunk costs if traffic fails to rapidly accumulate. Veteran analyst Paul Brody points out that independent L2S are expensive for most companies, and only those institutions that can generate a large volume of native transactions can justify building their own.
For general home use, a two-layer switch can be selected. There are many plug-and-play models, which are convenient and fast.
Many companies are now pursuing their own L2 projects because they want both pricing power and the ability to collect taxes within the ecosystem. This impulse actually dates back to the private blockchain era. However, due to lack of interoperability and poor liquidity, most projects ultimately fizzled out. If you don't have significant transaction volume, operating an L2 still requires ongoing investment in maintenance, audits, and security updates. Rather than going it alone, it's better to directly integrate with existing L2 platforms that are mature, open, and lower cost. Ultimately, L2 isn't a panacea. Once the market boom is over, the success of your L2 project will depend on whether you can calmly evaluate your need for and willingness to invest in areas that truly create value.
Hyperliquid's monthly transaction volume reaches 400 billion. Can its self-made stablecoin USDH take off with the momentum? Pakistan issues the strictest entry ticket. Is it really going to rise? Or will it just be a mess?
Layer 1 blockchain decentralized trading platform. Hyperliquid's actions can be described as disrespecting USDC. On September 5th, they directly launched an auction for the issuance rights of their own stablecoin, USDH, effectively saying, "I'll create and sell my own stablecoin." The result was a sensation, with major names like Paxos, Ethena, and Frax all participating in the auction, making it akin to the Spring Festival Gala of the cryptocurrency world. Consider that Hyperliquid handles nearly $400 billion in monthly trading volume in perpetual swaps alone, representing 70% of the entire decentralized perpetual swap market. Once such a traffic-generating giant takes the stablecoin market by storm, who can ignore it? Now that the auction has finally concluded, it remains to be seen whether USDH can truly transform from a niche internal prop into a recognized hard currency in the market.
I think this is really going to be the community-aligned stablecoin. And so there is a huge opportunity for an issuer or one of the proposers to really take part in offering a public good to the Hyperliquid community, which is one of the most active and engaged communities in the entire space.
Native Markets officially acquired the USDH stablecoin code on Sunday. Founder Max Veek posted on the X platform that the project will soon deploy the first Hyperliquid improvement proposal, HIP and Ethereum ERC20 tokens. Subsequent processes include first testing minting and redemption with a single transaction limit of $800, then opening USDH/USDC spot trading, and ultimately achieving unlimited minting and redemption. Following the withdrawal of synthetic stablecoin issuer Ethena, Native Markets' win rate on Polymarket soared to 99%.
If USDH truly takes off in the market, it would be a game changer for Hyperliquid. No longer dependent on USDC, they could issue their own token and thrive on it, confident in their own success. However, the problem is that this code war has been quite a saga. Companies like Paxos, Frax, and even payment companies have all lost to the newly entered native markets. The criticism within the community is even more intense. Some claim the vote was already predetermined, while others claim that validators don't bother with anyone other than native markets. Now that the code is in their possession, it remains to be seen whether native markets can truly transform USDH into a hard currency, or whether it will ultimately remain a matter of gossip. Don't underestimate Pakistan. Its operations in the crypto world over the past 2 years have been nothing short of aggressive. Previously cautious, it has now stepped on the gas. In 2025, it issued the Virtual Assets Act and established 2 new agencies, the Virtual Assets Regulatory Authority, PVARA, and the Cryptography Committee. The PCC is clearly aiming to tighten its regulatory framework. Even more outrageous, they've even brought in Binance founder Changpeng Zhao as an advisor, putting the pressure on the system. The market hasn't let them down either. Chainalysis found Pakistan's global cryptocurrency adoption index jumped to 3rd place. This puts it on par with major powers. They're also actively courting international giants, seemingly shouting, "We're aiming for a rise of a great power in crypto."
According to Dawn, Pakistan Virtual Asset Regulatory Authority requires major cryptocurrency companies to submit letters of intent. The OI is a process for companies to enter the country's digital asset market. Applications are limited to companies licensed by top international regulators, including the US SEC, UK FCA, EU VASP, UAE VARA, and Singapore MAS. Submissions must include a company profile, licenses, proposed service offerings, custody, payments, technical standards, assets under management, revenue, compliance record, and a business model tailored to Pakistan.
That means that the largest economy in the world is creating a valuable national asset, similar to how it stockpiles gold or oil for economic security and strength. So this is why I think the US sets the tone for the world. Trump is making crypto a national priority, and every country, including Pakistan, will have to follow suit or will be at the risk of being left behind.
Pakistan's recent moves are frankly a case of wanting the horse to run but not to eat grass. While publicly urging global crypto giants come invest, the barrier to entry is rigid. Without SEC, FCA, and MAS licenses, entry is impossible. In May, they officially announced the creation of a strategic Bitcoin reserve. Minister Bilal thundered at Bitcoin 2025, Pakistan must embrace crypto, but within the regulatory ironclad. However, in July, the IMF poured cold water on this approach, warning against using surplus electricity for mining. The rationale is quite pragmatic. Domestic power shortages and fiscal pressures are severe, and further disruptions could potentially derail the economy. Pakistan is thus caught in a classic sandwich, seeking to attract capital and build reserves while simultaneously fearing a choking situation. Whether they can execute major moves depends on whether they can strike the right balance between liberalization and tightening regulations.
Something terrible has happened. According to Bitcoin News, the Monero blockchain has experienced a time travel event. 18 blocks have been rolled back, which means 36 minutes of history has been rewritten. 118 transactions have instantly become false confirmations. KOL at KaneLeo55 noticed that an OpenSea AI page popped up on the official website subdomain, showing a waiting list interface. However, the page disappeared within seconds, and the official website pretended to be dead and did not respond. Amazon has directly offered a highly lucrative position, $500,000 annual salary for the role of head of crypto ecosystem. It sounds like the e-commerce equivalent of a blockchain manager, tasked with overseeing payments, building the ecosystem, and exploring Web3, a true CEO in waiting. Cointelegraph reported that the supply of stablecoins on Ethereum soared to $168 billion, breaking the record. Some people joke that this is no longer the Ethereum chain, but a global chain bank. Analyst AIE has been tracking the performance of Big Brother, Huang Liqing on Pump. After calculating, she found that he had lost a total of $4.334 million on a single coin. Big Brother was originally a die-hard Pump fan, but he didn't expect this trend to become a contrarian indicator.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.